Welcome to my daily report market analysis videos with me, Richard Perry, market analyst at Hantec on Friday, the 15th of May. There's a broad, well, it's a bit of a mixed outlook really across markets today. We've seen that equity markets have bounced pretty strongly actually. We saw a very decent close on Wall Street last night. The S&P 500 actually, it's one early stage, it was breaking down, it was completing this top pattern, but a sharp rally into the close. Was an incredible reaction actually from the bulls, and it really has helped to save what looked to be an increasingly corrective outlook that had been developing. And you've seen that futures today are slightly ticking higher again. So incredible reaction actually that we have seen, but that has certainly helped equities in Europe to rebound. They've had a couple of days of really significant selling pressure, and that has certainly helped to steady the ship somewhat. But you look across Forex majors and you continue to see a slight dollar strength, a little bit mixed today on that dollar index. But broadly speaking, you've still got Aussie and Kiwi under falling away, which would suggest lacking risk appetite. Also, the yen is beginning to gain a bit of ground back on the dollar. It's been a bit mixed in the last week or so. I'll talk about technical implications of that. But some of the key moves that we're looking out for is silver, my chart of the day, breaking out, really strong move there, and gold as well. Gold looking at a test of the range highs again. The oil price actually reacting pretty strongly today. We've seen a decent run higher actually on WTI and Brent crude in the last couple of days. WTI now testing that 29.15 reaction high from April, and Brent crude a little bit less developed in its recovery, and it's now sort of testing its own resistance at 32.25. Had a bit of a poke at 32.50, but reacted back lower from their early doors today. So it's starting to sort of gain a bit of sustainable support, it would appear, on that oil price, which is encouraging. Now Treasury yields have just been sliding lower, which sort of tends to add a bit of a negative risk bias broadly. You can see that through the spreads, which are falling away again. That would suggest a bull flattening of the yield curve, which tends to be fairly risk negative as well. So it'll be interesting to see if these equity markets can maintain that rebound. In terms of data points, we had Chinese data overnight, which was mixed. It didn't really sort of help to define the outlook for the day. We saw industrial production better than expected, retail sales a little bit worse, but also fixed asset investment worse than expected. So a little bit mixed out of China, and we're looking towards the US data this afternoon. Really some interesting data points coming out. We've got the New York Fed manufacturing expected to improve slightly to 63.5. Retail sales, look at that on ex-autos basis, which is the core, minus 8.6% in April. So really is a negative look there. Also industrial production down here, minus 11.5. So let's have a look at some of those on the where is it? Industrial production. Sorry, I'd lost it then. Yeah, industrial production falling away. So that fall away on industrial production would be, yeah, the lowest it's been since 2009 if it goes down to the 8% area. Also retail sales as well. Yeah, that's not looking great. 4.2% negative last time. Yeah, 8.5% is not great. And also the this is interesting as well. So New York manufacturing, Fed manufacturing, down at 78.2 is expected to pick up slightly, but only marginally. This is the first one of the series of regional Fed surveys. So it'll be interesting to see how that really impacts today. So lots to think about. And also, later on this afternoon, we have the Michigan sentiment, 68. So again, down to sort of multi-year lows on that Michigan sentiment there. But yeah, lots of US data to look at. Now, my chart today is silver. Now, silver has broken out, ranging across the last month or so, as gold has done, by the way, but silver is really leading that breakout. And what I'm going to do is I'm just going to quickly show you the relative performance of silver. Look at that. since this 6th of May, silver has absolutely just gone on a massive run, 8 odd % higher since that 6th of May reaction low. And it's just gone, and it's so, I mean, it is leading gold, and it is gold on steroids, I always say, but yeah, it's just absolutely storming higher. And you can see that breakout just yesterday saw the close above 1583. That implies around about 1690, 17 big figure dollars. And I think that the run today is just confirming that. Look at this RSI in the 60s, that is multi-month highs. Stochastic strong, our MACD lines are also looking strong as well. So you'd be looking to any sort of intraday weakness as a chance to buy. Spaces of support around $16. And then obviously the 1583 breakout point. So it's looking really strong, this silver chart now. And you wouldn't really be all that upset on silver, even if it sort of came back into this range now, because it's a decent band of support on an unwinding move, and you'd look to any sort of weakness as a chance to buy. But it certainly looks as though that silver is on a run now and moving towards, well, next resistance. I mean, I mentioned in the morning report 61.8% fib. It's not really doing a great deal of consolidating around there. So 1650 is the next resistance, and then 17 figure is 1690, 17 figure there or thereabouts is the upside target. So with that in mind, I wish you good luck in your trading today. Click here to subscribe to our analysis videos, and also click to watch our Trader Talks videos where you can gain some top trading ideas.